Let me just quickly introduce our panel. Al Escudero, Vice President of Tax at Cantel Medical Corporation. Al has developed the tax department into a fully functioning group implementing processes for international tax compliance where he insourced transfer pricing. Welcome, Al. In the middle is Elizabeth Blatchford, Manager of Transfer Pricing Strategy and Analysis for a small company known as Ford Motor Company, the Mustang, where she leads the company's strategic transfer pricing efforts globally. Welcome. And on the far end, Dr. Frank Schongborn, who is head of the Global Operational Transfer Pricing Management for the German headquartered Merck Group. Frank is responsible for the operational implementation and supervision of transfer prices worldwide, covering all divisions and subsidiaries. So thank you for joining us, Frank. And with that, I'm going to welcome back up Brian Tully, who is going to lead us through the final session. Brian?
Not as riveting an introduction as I got in the beginning of the day, but I'll take it. This is actually really cool. We had an odds-on bet that maybe no one would be here for the final session because we had that break. So that means either you're really dedicated to transfer pricing or raving alcoholics, and I'll let you determine what you are. Even better. Can we bring the alcohol in here? So what we're going to do here is go through 3 successful stories of how people were able to obtain budgets and automate things and do it right. This is a really awesome session. It's kind of like the underdog made good movie. So before I get into that though, how many people were ever formally trained how to write a business case? Raise your hand. 1. Really? That's it? 2. 2 people. And it was very interesting when our steering panel brought up this topic for a session. A lot of people really kind of learned the process as they went. Nobody was formally taught. So if you know these principles, it's kind of like going to church. You're going to hear some good stuff and go, oh yeah, I should be a better person. But you might actually learn some good stuff along the way, because we have 3 different stories, which is great. And they all kind of have different paths of how they were successful. So with that, I'm going to begin with company profile. If, Al, you could start off, just tell a little bit about your company, your structure, and start there.
Absolutely. So Cantel Medical is currently about a $500 million medical products or medical products manufacturer. And we are in the broad infection prevention and control arena. And we have been growing over the past, I've been there now 9 years. And when I started, I formed the tax department. I was the first in-source or in-house tax person. We were about a $100 million company. So we evolved over time organically and through M&A. So one of the things I did early on was we took the compliance process in-house. E&Y had been doing that work. But then after that, I decided, we could use transfer pricing to come in-house as well. So I put together a proposal, which I still have here, from 8 years ago, the Excel spreadsheet that I put together to the financial management and then ultimately upper management to build the business case as to, in my case, it would have been, we're 20% cheaper than E&Y. We have better controls over our process. We could manage the process better. If we have M&A, which we've always had, we're not beholden to an outside consultant. Every time you add another study, you're on the clock, if you will. So when we have M&A now, we do our own, we do our studies. There's more work in-house, but in my mind, it's much more fruitful, more rewarding. And one thing that's constant in my company is change through M&A, through whatnot. Also, in part of my proposal was, we can certainly use the reports for audit support. In fact, last year we completed, the IRS has audited us twice since I've been there. So one of the issues was 482, and we had around the same time a Dutch revenue audit as well. And we had a somewhat similar transfer pricing issue as well. Now clearly I couldn't be in the middle of this, but I had two jurisdictions kind of like working through me sort of to resolve the transfer pricing issue, and they had my reports from Thomson-Reuters. And they were very useful in presenting to both jurisdictions. So, but when I presented this early on, one of the things was to tell management, you know, if we get audited, we can present these reports, and indeed, that happened. So that was another, maybe not the bigger sales pitch, but one of the pieces that I threw in there. Whatever it took to get, you know, this put through upper management. Another thing too is you're more seamless with your internal accounting groups, because you're not, in the past, if it would have been the first couple of years, I was the go-between E&Y and the accounting groups. So they ask me for information, I go to them. That's gone, and now it's direct interface, more efficient. What else? Another thing too is, you know, by having us do it, you're really educating upper management. So when I was selling this, I had to articulate to them, well, what are the benefits of, first of all, transfer pricing, but then having your own people to actually control that process, to give you management the tools to actually see different analyses in a more timely manner, as opposed to having to wait for another consultant that may be working on other clients that you're in line. Now, you know, so that was another sales point as well. So I had a few points that, you know, I used to try to sell this to them, and it took a couple of years, but, you know, it's worked out, so, you know, so far so good. So, and again, I still go back to my original proposal from 8 years ago. And it's so prophetic because it really has played out that it's worked out very nicely.
So
That's a summary.
That was a great summary. I think you said your whole case. But,
Are you sold? Are you sold?
I am.
Good.
You got me. We're going to break this into pieces for the other two, and please come back and rejoin for that. That was a great story. Elizabeth, how about Ford? If you could tell a little bit about Ford's structure.
Okay. Probably most people know Ford. We design, manufacture, and build vehicles. The transfer pricing structure is a little bit different, and for you to fully understand it, you need to understand a little bit about our profit reporting system. It's very different than a lot of the profit reporting systems in most companies, in that there are no transfer prices included in our profit reporting. So our profit reporting is by region, like most companies, but it's the corporate profitability for a particular region. So it's by where the vehicle is sold, and it's the total corporate profitability for where that vehicle is sold. There's absolutely no transfer prices in that profitability. Okay, so there is virtually no one in the company other than myself and the joint ventures, of course, that are very interested in transfer pricing. And so my group sets transfer pricing policy. We calculate the transfer prices. In most cases, but not all, we put the transfer prices into the computer systems. We monitor the results of the transfer prices, and then within the group, we have one other gentleman that does the controversy type of work, but my group supports him with all of the backup detail and everything as well. So we do virtually everything from beginning to end. Finance doesn't do a lot of it. And so I may have a larger organization than some of you would otherwise, but because we're a Ford Motor Company and we've had a lot of financial issues in recent years, we've also had to be very cost conscious as well. So in the United States, I have 8 people in total. 3 of them are Ford Motor Company employees. 5 of them are contract employees. I have a group in India of 15 people, and I have 1 person in Europe. They all report to me, and we are responsible for transfer prices worldwide.
Same question to you, Frank?
Yeah, I'm representing Merck. You may have heard about Merck, probably the wrong one. I don't know who of you is aware. Yeah, there are 2 ones. The company was divided into 2 parts 100 years ago after the war, and the US, Merck & Co. is allowed to use the name Merck only in the US, and for the rest of the world it's Merck KGaA, where the headquarters is in Darmstadt, what is close to Frankfurt, and so we are using the name Merck for the rest of the world. Both companies do operate in pharmaceuticals. Both companies are huge, so no wonder when people are confused. So I'm representing here the German one. The interesting thing is we also have chemicals businesses, and structured, by the way, everyone probably of you has the products of us with you, because our chemicals division is producing the liquid crystal materials for the liquid crystal displays. So every iPhone and all notebook, computer, iPad, all these kind of things have our products in the display. So this is quite interesting, and also a number of other lab supply products, but again also a number of pharma products. So this gives an idea about the complexity of our organization. So we have also double-digit billion in sales, many complex subsidiaries around the globe. Everything what you have heard from DuPont is valid for us as well. The challenges are the same. So everything sounded very familiar to me. A word on transfer pricing. We have a 3-layer approach. So we have a couple of people in the tax department who are dealing with transfer pricing. So the new group is named transfer pricing. Then we have my department, which belongs to accounting and finance. So the question was how we should name ourselves. We finally decided transfer price management. That sounds more operational and more hands-on. Doesn't sound like synergies and cost efficiency, but this is the second layer. So I have a team of 15 people located in France, Switzerland, and Germany, and we are supervising all the intercompany flows and set the prices and do all these kind of things. So in my department, basically accountants, controllers, and these kind of people are working.
Great. So the first part of any business case is understanding the problem you want to solve and why do you want to solve it. So Frank, start with you. What was the driver for change, and what did you want to accomplish?
Many years ago, Merck has a setup that the company was driven with local entrepreneurship. So was proud that every country has a own legal entity with strong managing director, CFO, and they are very proud of the local results. So whenever it comes to intercompany trades, there was in the best sense, arm's length discussion and negotiation on transfer prices between the different business managers. So this was of course not efficient, but this was the policy how the company was working for quite a long time. Then maybe 10 years ago, when significant acquisitions took place, the leadership model changed, and there was a trend that the decision that all the incentive systems and everything was set only for all the managers based on global KPIs. And there was a message from the global CFO, okay, finance and tax will take care about transfer prices. Please do not touch anymore. Your bonus will depend on the group result. So sounds well from tax and transfer pricing point of view. Challenge is no one is taking care anymore of it. So whatever the transfer prices stay or change up and down, so the outcome on the legal entity level is probably a result to random, yeah? And no one was managing this. And then you end up with the significant true-ups. And then the challenge was here with the finance, and I was in this role with the finance, with divisional finance organization to manage this. And there was a big complaint. We do want to focus on global business. We don't want to deal with this stuff decentralized. We need to organize all these kind of processes. So please establish something centrally. And then, due to the number of pains and discussions and troubles around, there was the decision made. Okay, we need to centralize these activities into one department centrally, which was at the beginning more or less empty, so no people were there. And then the show was starting, basically. This was the kickoff of all the activities, probably 4 or 5 years ago.
Very cool. Elizabeth, what triggered your project?
Well, we do year-end true-ups, have historically done year-end true-ups, and they could be rather large. The year-end true-ups were taking about 4 months to calculate. We were using 582 spreadsheets, Excel spreadsheets, to calculate them for all over the world. So it was a lot of work, a lot of manpower time. Our auditors were coming through with big concerns because we were not including those adjustments in our provision. Thank you, in our provision. And so we were having a bit of problems with that. And at the same time, the business groups, the finance groups, were looking for a way to get their statutory results done sooner. And we were one of many areas that were holding them up. And because we weren't them, it was a lot easier to push on us and say, why aren't you doing it better, than to look at some of their other issues that they had. And so they were pushing at us as well. So we had a whole bunch of different reasons for wanting to get the whole process done quicker. One alternative, you would say, is just to get the transfer price done right. The first time, we had tried many different ways of doing that. We've tried budgets, we've tried prior year actuals, we've tried forecasts. All I can guarantee you for sure is that initial transfer price is wrong. That's all I can say. And it's not through any fault of my people's or the finance groups when they're doing the forecast or anything. The automotive business with things like variable marketing and warranty and stuff can move very rapidly. The profits can move up and down quite quickly, and volumes, just how the fixed costs are absorbed by volumes. Your volume moves a bit and you're way off. So there was going to be year-end true-ups. There was no doubt about that. So the question became how to get those true-ups done most efficiently.
Very cool. And Al?
I'm going to echo some of what Elizabeth said. We also were in a situation where the outside consultants were not really focusing us in a timely manner. So we would see some true-ups annually that really should not have happened, and they should have, really happened quarterly. There should have been a better pulse on what was happening with our transfer prices. So, that was one impetus for sure to mitigate that, and by having it, conveying that if it's done in-house, we can manage that better, and thus not have these issues, especially at year end. When you get to the fourth quarter, you do not want to have that fourth quarter true up to transfer prices that certainly could be avoided, and that was part of what drove us to bring it in-house.
Great. So lesson one, when you're presenting a business case, is you need to tell the people what the current problem is, because upper management will think that everything's fine until you do. And then you need to have a reason why you need to change it. So there's something broken, here's the pain it causes, and then what you want to do to try and solve it. A lot of people will immediately go to their boss and say, I need to do this. And people are like, why? And they're like, I don't know. And then they kind of like, if it's nice and well structured, you're going to do it. So the drivers can be all types of drivers. Could be your policy's 3 years old. You hear that a lot. M&A activity, IP migration, under audit, your CEO's initiatives. This is one of the few times you should go on your corporate website and see what the top 5 goals of your CEO is. See if any of them overlap with what your project is. Because if it does, that will give you a lot of initiative. The primary goals are normally either risk reduction or trying to grow cash, one or the other. So just have this, know what buckets you fall into, and at least craft the beginning of your story. So now that we know what we want to do, we know why we want to do it. Al, I'll start with you. What divisions or people did you get involved? And then who was really helpful and who was harmful?
Yeah, so it was the controller and the CFOs of the divisions, because those are the ones that the CFOs of the divisions present the information that we need for the transfer pricing, and had originally in the past presented them to the consultants, the outside consultants. So they would have been more the friendlies, if you will. But they're also, by the same token, the ones that are mindful of the budget and, you know, what's this going to do to us, if it's just going to cost us more, you know. So the same people who are kind of on my side were also questioning, well, all right, that's fine if you give me some support for what you're proposing. So I did put together a proposal on, what it is right now versus what it'll cost. And the way I did it in my mind was, let's say there's 10 studies back then that we had to do, and I sort of took the total cost that the consultants charged, divided it by the 10, and I almost did like almost if you're doing a square footage on a piece of real estate, this is per square foot. So I came up with per study, and then I kind of layered that to, if we did this in-house, and clearly in-house won out. So that's kind of the analysis that I did. I broke it down to almost price per study. So they were already supporting me, the controller, the finance, and then the CFO came on board. And when I sold them the proposal and I articulated to them the benefits, they finally gave me the green light.
Very cool. Elizabeth?
I had the finance group on my side initially, through the whole process, because the CFO right off the bat wanted me to do it.
Everybody has that problem.
It was just rough dealing with it, but he's great from a tax office perspective, because he truly believes that it is his responsibility to make sure the tax office has the information they need to do the taxes, which is sometimes a novel concept. So I had a lot of help from that arena. The area that was unintentionally unhelpful was actually our IT group. They understood what we wanted. They were trying to give us what we wanted, but Ford has a policy of doing our IT work internally. So we spent, first I spent about a year just figuring out what we were doing presently and how we wanted to do it in the future, because and we found out in a lot of instances where we thought we were doing things exactly the same, we were not. So we figured out what we wanted first, and then we talked to the IT group and spent 6 months discussing what we needed and what we wanted, and going through in minute detail what was involved. And after 6 months, they just said, gee, we think maybe this should be done outside versus internally. So that slowed us down a bit. Like I said, that was unintentional, but it is a fact, and so we ended up going out and looking at different alternatives, and ended up with Thomson-Reuters.
Yeah. When it comes to how the show was started, I think one element is, at least from my point of view, a little bit missing here. You talk a lot about processes and systems. So, in my view, the key element here of the show is people, and to communicate, to let them communicate. So, communication is everything here. So, what I experienced here, even if you have managed to find some people, they have to communicate, and all the key skills you mentioned when you look for people are valid, but I do not need people who sit in front of the screen and do number crunching and don't talk to someone else. So when it comes to interfaces of my department, we talk significantly to techs. What is a special story I will share you in a second. Supply chain, marketing and sales organization, divisional finance, corporate accounting, shared service centers, many, many different stakeholders around. So therefore, you really need to understand and transport what you need towards all stakeholders. Concerning tax, in my view, tax experts on transfer pricing, and this is a message I also frequently broadcast throughout Europe, tax experts have developed their own language on transfer pricing. CAP, arm's length, segmentation by P&L, all the things. Even what is a transfer price, what is a transaction. This is pure tax speech. No one in finance accounting will understand this. And I have experienced many, many meetings where people sit together, talk hours and hours and don't understand nothing each other. This is a painful exercise to observe this. And it's always when you realize the text tries to talk directly to business people without the translator who is bilingual. Yeah, it's totally failure. So text people have to be aware that this is a risk for them. The same as when they write a documentation or guidelines no one does understand. This is key. Yeah? And really need to move outside to talk as long as you have understand each other really. And I also had to learn this text speech over 1 or 2 years, and then I understood where the problem really lies. And once you have understood what tax guys want, you can turn around and talk to all the business guys, translate this into business language if you have these experiences. Then you prepare slides, by the way, which are not so technical like tax guys are used to. Tax guys have significant deficits in preparing PowerPoint slides. So this is a major disaster. Yeah? So you should really learn from the marketing and sales guys. Yeah? Font size 8 and broadcast everything. Totally terrible. Terrible. Yeah.
And no code sections, right? No code sections.
So I see you need to transport the right message to the business people. And in particular, when I hear about the IT things, yeah, we realized years ago, before I was on board in this position, when tax guys try to prepare a user requirement specification which can be programmed by IT guys. This is a waste of money. But it takes time until everyone realizes, and you cannot blame this or this person. This is really what you need, translate, that others understand. And in particular, what I would like to add here, it was partly discussed in previous sessions, what is transfer pricing all about and educating people. This was basically one of the first messages. I gave over 60 roadshows, what is an 1 hour 90-minute speech to all organizational parts. What is transfer pricing? And again, not arguing with the latest legislations, but applying a business speech. And then you get the people on board. Okay, it's important we understand left pocket, right pocket, but anyway, there's a risk. We do not want to tax the same dollar twice. We spend a number of money to earn the dollar, but then we put them away to tax authorities. This is the speech, the simple speech you need to apply. And this is helpful. And once you have positioned yourself, also tax colleagues now understand why my department does help them to bring the policy down to earth, and vice versa. So communication is really key before you start anything with technology, processes, and everything. So don't don't underestimate these components. This is really key to success. Otherwise, projects will fail.
I think first, Frank is going to be giving the speech next year just in case, because that's just hysterical. Second is, completely agree with this point, there is a language barrier. When you get a finance person, an IT person, and an economist in a room, there's very little communication. There's lots of words that go back and forth, but very little in the middle. And there's actually not too many people who can broker that right now. It's something that you just have to know going into this. And I've actually challenged our own economists for why do you use such small fonts? And there's one paragraph this big in a PowerPoint. And it gets down to legal documentation. An economist is used to writing legal documentation. Everything's going to court. This PowerPoint will never be seen again unless you download it on your computers. So, that's why there's only 3 or 4 words on here, because we're talking about the points. So just understand that. That is a brilliant, brilliant point you brought up. So when you're actually trying to put something together, now I know what I want to accomplish, and I know why I want to accomplish it. Start thinking about a couple things. The easiest way to get funding for your project, to get it moving, is tie it to someone else's initiative. So figure out what they are. Is your organizational strategic to simplify stuff, to make things more efficient? What's your tax priorities? Is it to reduce budget, cash tax savings? The finance department's priorities, maybe they're different. Maybe they're doing an SAP reorg. Great, those are huge for budget. Somehow figure out a way to tie yours into that project. And then you can get funding. And are you aligned with all the above? If you're not aligned with all the above, you're probably going to have a very tough road. So try and figure out a way to find someone who's your ally. And this takes about 20 minutes. Write down some of the groups, some of the people, and we have this, by the way, this whole template, a lot more that you can download. You'll get a web link, please do it, and use it as a template for any project that you have. The CFO, controller, VP of tax, international tax director, transfer pricing, IT, and then you go, okay, what do they care about? And just list it up and see who's going to be your friend and foe. Just so that you know going into it, wait, IT definitely is going to not be your friend on this one. Okay, I know that going in, but I know someone else is going to be my friend. And then that way you can start aligning interests. It's very important for whatever, but very few people do it. They go right in and say, I need money for this. So this is just a good 101 template. Although I like the way Frank said it, much better than me. So, I guess we have a lot of people in the room here. Unexpected issues that popped up. Something that you'd like the room to know. If you were doing it again, you would have changed X, Y, and Z. And just kind of a lesson learned through the process. And Al, I'll start with you.
I guess getting all the better documentation up front from all the people, the groups that, I guess let me take a step back. Knowing very well who the people who are supplying that data is, now that you're doing it internally, and making sure you have a good pulse on who those pertinent people are within those finance teams, so that when you do have your documentation, you're getting the right documentation from the right people in the most effective way, and you're talking to those right people, and that takes some time when you are bringing it all in-house, because you really don't know. I mean, you kind of like, you may have been passing information on from an E&Y or a consultant onto somebody else, but once you are interacting directly, you're not sure if you have the right people or if somebody's delegating it to somebody else, and that takes some time. So perhaps getting ahead of the curve is one area that I probably could have done better had I known what I know now. So, and that certainly comes with experience as to who those the critical people are that are really the ones that are really needed to make your transfer pricing documentation all that much better.
There's a process, I'm sure, in each of your organizations that you have to go through. For instance, in Ford, you generally need to get it in the business plan before you get it in the budget, or you're not going to get any money in the budget. So you have to know ahead of time to say, hey, I'm going to be doing this. Please build it into the business plan so that I can get budget for it when I need it, which is a little bit difficult because you don't know at that point in time how much money you're going to spend, but you have to give them something so that you can at least get started. It also seems to take forever, even after the project is approved, at least in Ford, to get through all the paperwork and get purchasing to sign off on it so you can actually get started. So understand that process in your organization as well to make sure that you can get started when you want to. Understand that what you're going to end up with isn't what your conception is when you start out. Things change frequently for the better, but you have to be fluid and be able to move with it and understand the changes and work through all of that.
Yeah, I was working more than 10 years as a head of divisional finance, so I was originally making the budget and discussing with all the people who wanted a budget for whatever project. So I was on the other side of the table years ago, so I know how the show runs. But it's also interesting to see how you get the things. Concerning transfer pricing is really key that you start really an early onboarding of the stakeholders. So you have to develop your own thing. Okay, what is the challenge, where we want to go to, and to put it into a long-term frame. You should understand transfer pricing and what we talk about here. This is not a one-off project. This is a continuous journey. So establishing operational transfer pricing processes, systems. This is a continuous thing, and you should not do quick and dirty solutions, rush in and out, and this is not a good idea. So should take your time, really what you need, what is reasonable, and then you should start with individual discussions with the key people who have to contribute resources, finance, IT, wherever, to deliver. You have this idea, what do you think, what could be a reasonable timeline. So talk with these discussions, and again, leave the office, move to the office of the others, talk face to face, and then onboard them to the topic. And then you get over time the buy-in later, and then, okay, I think we should go for this. And it's not only I need money. This should not be the first sentence here. He says we have this problem. This is potential risk. This is the pain. And if we do this, we can quickly, or not so quickly, but on long term fix it. And okay, this is the price. Everything has a price tag on it. So, and if you go like this, then it's more easy. And then you should start very early in the budget process to place it. And then repeating as you remember, we've talked. And so you have to replay the sound frequently, and then people get used to it, and then it's more easy to get the final approval on this. And then do not have frequently moving targets on what you want to have. Take your time, really think through everything, and then work continuously step by step on what you have in mind here. As I said, long-term perspective is important to convince people.
Yeah, if I could just add to that, long-term perspective means more than just the project you're trying to work on, too. When I took my CFO through it, the project that was approved was just the first step. There are several more steps in line. And I said, now I'm going to be coming back and talking to you about these because these are problems, too, but they're not as high a level of priority as this initial one. So we're going to do this initial one first, then we'll talk about these others. And so I'm about to go back and say, hey, remember I told you about this other problem we had? Well, it's now time to start looking at it. So
That's great. The one thing I would add is there's a lot of assumptions made about what's in a general ledger. Very few people truly know what is in there and what is not. What are the controllers really doing? So we find one barrier is make assumptions that either they have no information, or they have everything, or that they are following whatever you laid out. So really understanding what's happening out there should always be the first step before we move forward with anything else. When going through, budget cycle is number one. We find that people say, yes, okay, I want to do this. Okay, I got approval. And then they're like, yeah, you're delayed a year and a half. And it's like, what? You know, how did that happen? Well, you know, it's not in next year's budget. But it's November, it's October. Yeah, we settled that in June. You know, so now you have to wait a year and some time in order to catch up. So know the budget cycle, deadlines, the requirements, return on investment. Figure out if this is something that's mandatory. It definitely helps. Spend some time, and we actually have a cheat sheet, which we'll go through at the end, of some ways to create a return on investment, because that's normally the language in which procurement's going to talk about. Budgeted versus non-budgeted expense. Know what is big enough that you need to budget for next year, and what maybe you can sneak in, because there are certain projects you can sneak in if it's under a certain amount, and it's always good to know if you're over or under, because sometimes you actually have windows that open up where you can spend a tiny bit more. Competitive versus non-competitive vendor selection. Very important to know how this works, because we have seen companies that go all the way through, do their own evaluation, come up with the solutions, come up with the project plan. They hit procurement. Procurement's like, oh, you didn't follow our process. Now you have to bring in 4 people. And they say, but we know the answer. It's right here. And they're like, yeah, bring in 4 people and go through this huge thing again. So know what your procurement department's like. Just call them up or her up, and it will take 10 minutes. And you will know whatever their process is. And what's going to be the driver for them? Is it going to be cost savings? Is it ownership? This goes into the primary goals from before. And also deal breakers, hosting or non-hosting. Maybe there's a mandate to outsource and reduce internal hires. Maybe it's the opposite. You need to internal hire and you have to reduce consultants. If you know that going into the battle, that will really help so you don't just waste time. And then contract term, who negotiates? Is that tax? Is that finance? Is that procurement? Is that IT? And then signatures, because projects sometimes get delayed for 3 months because somebody goes out on leave. Or there's a 9-trail signature process. And if that's going to take a month and a half, you should know that, because if you think your project's going to start next week, it's really going to start a month and a half in next week. So very good things that we find that people miss. But if you have a cheat sheet, which we'll give to you, then you could just go through it and think, oh yeah, I do have to think about that. It will take a half hour on every project. And then you're going to be that much more successful in whatever you're trying to accomplish. So now here's the fun part of the story. Were you successful, and what were the benefits? So I'll start with Al.
Oh, absolutely. The benefit, successful, we got this approved 7 or 8 years ago. And the benefits have been, certainly one was a cost. We lowered our cost, and we weren't beholden to, on M&A, to have to include, more pricing or more costs from the consultants because we added our company. Like we literally just announced last week we're acquiring a UK company. And in fact, the CFO wants me to give him a transfer pricing overview of what are our transfer pricing studies, because transfer pricing is becoming more and more, important. And now, the CFO has his own internal group that's doing the work, and it's to the point where they know, for instance, somebody else in our group said, well, some of the due diligence or the integration, I should say, planning was, well, who are you going to hire to do those transfer pricing? Well, no, we do it. And what do you mean you do it? Oh, no, the tax department does it. So some people didn't know, externally, oh, okay, you do. So it's come a full circle. Like, yeah, we have the resources, and if we need external help, like maybe somebody, Thomson-Reuters, maybe Hal McClure or whatever, we can pick up the phone and say we need help on certain aspects. So yeah, it's certainly been incredible that it's been a nice addition to our humble tax department.
Cool, very cool.
Yes, absolutely was successful. No doubt about it. Like I said, we went from about 4 months worth of work to getting it done. Well, we can physically do all of our true-ups within the close. in a 4-hour process. However, because of communications problems with our finance group, while they thought they wanted it within the close, they decided they did not. So we now book it, we calculate it then, but we book it after the close in the next months. But it's done very quickly. We actually have the capability of running it quarterly. Have not seen the benefits of running it, we have the capabilities of running it monthly. Have not seen the benefits of running it monthly because our finance group does not book all costs and everything on a monthly basis. Some of them are only booked on a quarterly basis. So we run the system actually 5 times a year, each quarter close, and then November, so that we try to get the books as close to correct before year end as possible as well. And have a chance to look at everything. We frequently now, with some of the reports we get, we'll be calling up accounting saying, we think you made an error. And they go back and look and say, you're right, we did. So, it's wonderful, yes.
Right?
Yeah, as I said, the advantage are in many points visible. One thing, of course, any of these intercompany discussions have saved some resources of the management. So far, we do not have anymore the various people in the local legal entities heavily dealing with the different data migration things. This has significantly improved. We developed, this was hardly mentioned, we have developed, or anyway the idea was to go for a continuous price setting approach. So whenever we detect a year-to-date deviation, we immediately update transfer prices for next first of a month. So we get rid of this year-end adjustment with all these disadvantages for double taxation and customs duty, and everything is behind. But by the way, brings me to the question which I have been discussing since a while with many people: where do you post these kind of adjustments in the P&L? And do you reconcile this as well with your inventories and all this kind of accounting stuff usually tax colleagues do not think of? So many of these additional workloads at the end have been gone, plus additional discussions. Interesting thing recently happened was tax colleagues outsourced part of the documentation work to a PwC consultant because they were short in resources, and the guy was doing the Word documentation with everything here on the function risk profile, and then he needed some data. And after a couple of weeks he came in and said this was crazy. Sitting next to the door, I found someone who speaks my language, who has all these data available, give it to me within a couple of minutes, and I could continue work. In other companies I experienced where this project would have dealt months, and here I was done with this number of subsidiaries after 3 weeks. So this was really cool to experience, because this is totally different setup, but so to have this data in a way tax colleagues need them, this transactional segmentation of P&Ls and all these kind of things. So this brings in the daily interaction a really added value for the tax colleagues as well as in finance. And the final comment, this kind of operational transfer pricing when it comes to processes, systems, and data, this should really be a joint effort from tax and finance. So it really is helpful to onboard finance colleagues as well, because let's think about BEPS country by country. In my view, when this becomes a reality, what will happen? Tax colleagues will forward to finance, please fill out. And until end of next week. Yeah?
End of next week.
End of next week. And then,
Why they give you that much time? They're being nice.
and then tax finance guys say, come on, this will take months to do it in a once, yeah? And no one will understand where the problem is. So usually this additional burden of preparing this data is quite often done by someone else, where the additional administrative burden pops up. And I remember very well a discussion, by the way, maybe also interesting for you, when I needed additional resources, I have to ask my boss, who is not tax, and I need more resources because the neighboring head of group tax is requesting more and more. So how should I balance? I need to serve these requirements, but I have to apply for additional headcount someone else. So therefore, to form and joint force here to bring this topic to the top management attention is really helpful. So it should not work against each other, so not together, but together.
That's awesome. Awesome points. So what we've done is we've written down a bunch of quantitative and qualitative examples that you can use. So just go down the mental checklist, because sometimes people think, oh, it'll save me a little bit of time here. But the best thing to do is add up everything. Just go down the list, see if it applies, X out the ones that don't. And start with operational cost savings. You know, are you going to lower outsource costs? Are you going to have less errors? Costly that way. Reduce overtime hours, time savings, month end, year end, quarter end close. How much time am I saving? What am I going to do with that time? You have cash tax savings. Anytime, go the past 4 or 5 years and look at anytime you were double taxed. And are you going to eliminate? No, you're not going to eliminate double tax because certain countries are really mean. But you will be able to reduce it. So take a haircut, take 10%, 20%, and just see what that number looks like. And just add that to the equation. Take something ultra conservative so when you go in front of your upper management, they know if they challenge it, it's only going to get better for you, not worse. And that's the idea. And then reduce effective tax rate volatility and TP reserves for the financial statement. If your boss is an ETR guy, this is a good one right there. You know, hey, you know that giant reserve? I'll just take 10% off because I feel more confident in my number. You know, you can really have a number of avenues to drive your business case, but you need to take a little bit of time and go down the list. Qualitative, risk reduction, BEPS, just throw out BEPS. Play Jon Stewart. I didn't play the clip because it was so darn mean that otherwise I probably would have. I mean, just give him some of that or her some of that. Improved data management is always one of the IT goals. That can sometimes get you on there if you begin showing the flaws. Enhanced reporting, anytime you're doing better forecasting, normally the CFO is going to really like that one. So these are just some steps. It's on a card. We put it here for you so you can take it home. You can use it for any project you want. So this is just to help out. You have 3 people who were successful in pushing very different types of projects. Please ask questions to them. So I'm going to open it up to questions.
Al, everybody else told us about the size of their tax departments. I'm with a similar size company as yours, although it sounds like you're going to go pretty much further with the new acquisition. But what's the size of your tax department?
It's only 3. It's just 3. Yeah. And so we have, you know, obviously everything's a smaller scale, so it's 500 million. But, you know, our goal is to be $1 billion, and to get there, it's probably going to grow. I've already been asked, you know, and I'm right now at the point where I'm looking more to a consultant for the next year, and then we'll figure it out. But it's 3. What's your size, if you don't mind me asking?
Well, they were 3. They went down to 2. And since February, after I started, we're hello. I'm using consultants now.
Got it.
And they're flipping out over the costs. And we're just trying to figure out what the new correct mix should be.
Yeah, that's a tough, yeah.
And the mandate is to keep it only at 2, but that prohibits us from doing a lot of stuff in-house.
I hear you. Yeah.
I just wanted to say that I very much enjoy this panel, but I'm completely unrelated to the topic today. I just wanted to know, how did you go from industrial engineering to transfer pricing?
Sometimes this must be helpful because I think in a structured way and think in systems and elements and how pieces should work together. Yeah. Basically, I'm financial accountant and management accountant, all these styles. So I was working in many of these controlling areas, division of finance areas. And part of this job was also to monitor transfer pricing. So what my department, myself, was doing, only looking on gross margin, 40% of what we had, something like this. And then I was dealing with an acquisition integration, post-merger integration for one year, and then took 10 years in overall, then the question was, okay, what could come next? And this position, head of operational transfer pricing, was vacant since more than 12 months at that time, with a number of headhunters not being successful because they looked for someone who has not a tax degree and this usual Big Four background, but someone who takes care about reporting systems and all alignment with the finance and accounting organizations. And when I was starting this, to be honest, 2010, it took a while. Okay, what I inherited here. I said, okay, I will take this up. I can build up an organization, maybe interesting, something new. Yeah, also broader focus now, not only working for controllers or in the controllers area, but also for accounting and tax. And maybe this is an additional piece. And then after half year, it turned out, okay, this is much more complex. After learning the tax background, this was then really thinking, okay, and what needs to be done here, basically. And the key element which I had in mind was that time, because I disliked, for whatever reasons, from accounting and financial analyst point of view, do not like this year-end adjustments. It totally confuses P&L, forecasting, everything. What is necessary when the total personal bonus at the year-end depends if the margins are hitting actuals? What is necessary to get this objective manager? You do not have the instrument with debit and credit notes at the end, no true-ups, but you need to hit the target. So what is necessary? Obviously, continuous monitoring during the year. Obviously, you need a reporting system that allows you this in the right segmentation. Then you need to have fast decision processes once you have to detect a deviation. Then talk to people on forecasting, reasons, and then coming with a feedback. And then take measures, countermeasures. So updating prices for the rest of the year to steer the margins. You combine forecast information to hit the target. And if you compare this kind of task with what usually a financial analyst or controller is doing, he always compares actual versus plan, detects a deviation, and takes measures. Basically, this is totally the same job profile you need. Compare, not operative plan, but the target margins given from tax, compare with actuals, and initiate measures, discuss with business, and so on, and ensure that the data are managed, that you get this on time. So and then you finally realize you can only be successful when involve a number of people, and you also close the loop to update the prices in the different ERPs on SKU level. This is the instrument to turn the margin to the target at the end for the whole year. This was the idea. Obviously, everything of this needs to be successfully managed, and then probably do a good job here. So this was the idea when I entered the job 3-4 years ago.
Do you have a question?
What would you counter for an argument with, we have resources in India. Our cost base is very low there. What's wrong with Excel spreadsheets and Access databases? I'm still getting the job done. Why do I need to make this investment?
Can I start that
Oh,
one?
you can go for that.
Because I have resources in India too. My first counter would be that you may be getting the job done, but are you getting it done accurately? And you may not find out until years afterwards whether you're getting it done accurately or not. It is probably being done somewhat inconsistently. I know that processes in India are very strong, that type of thing, but they're still human, and they make mistakes. And if you look at the statistics on Excel spreadsheets, there's some out there on the web somewhere, but it's a dramatically high amount of mistakes that you will find on Excel spreadsheets. So I can almost guarantee you that your numbers are not correct from that perspective. So that's one reason. Another reason is, how soon do you want the data? How soon do you want to be able to react to the data? Do you really want to do true-ups and adjustments that cost you money from a customs perspective and an indirect tax perspective? Or would you prefer to be able to change the prices and not have to do those lump sum adjustments, and therefore save money that way. So those are two of the big ones for me. You guys got any others? Nice.
Sometimes the Excel spreadsheets disappear with the people. I don't know.
Amen. Or they get so complicated and so strange that nobody else knows how to do it other than whoever the expert is, So that is a problem too when somebody walks away. And I don't know about you, but in the past, I don't right now, but in the past I've had some problems with turnover with my folks in India too, so.
Yeah, I would normally look at the amount of audits, penalties, if you've had any kind of identified risk or something, that you can somehow attribute that to maybe India work, if it's been historical. Also, normally that's a culture of following rules, following a process, and transfer pricing by definition normally doesn't follow into that. It's more of an art than a science. So, but lost my train of thought with that one. That was funny. So one final point is sometimes when you're making an argument, and especially you'll hear this in Japan, Japanese bank, I know someone's here from there, you'll hear, wait a minute, no, I like paying more money. I like to, nope, that makes me safe, I'm good, I enjoy overpaying. And that's okay, that's a position. We're not saying be more aggressive. We're saying if you do things right and have things automated, you follow your policy better, you will save money most of the time. We find clients and prospects and other people who use other systems other than ourselves save anywhere from hundreds of thousands to hundreds of millions of dollars just by following their rules. It's crazy. So just always hammer that, because that's like the third rail of, no, you're gonna lower the effective taxes, oh, you're being more risky. No, it's okay. We're gonna follow our transfer pricing policy better, protect ourselves from BEPS, and along the way, that's gonna help us save us money for these reasons. So with that, I personally want to thank everyone for being here. This is our first conference of its kind, and this panel has been fantastic, awesome. But just being in the room, sharing with each other, that's the real value of this. So thank you for coming.